What's up YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt, and do your own DD. Wow, crazy day in the market today, right guys? So we had some pretty insane volatility today. SPY going up 2.68%, the NASDAQ moving up an amazing 3.6%, one of the biggest gains we've seen in a very, very long time. In fact, it's been about a year since it's seen this kind of increase in the overall volatility, overall price action of the stock in a single day. On the Dow Jones, it finished up 2.1%, and the VIX did tank today, going down an astonishing 7.63%, showing that the bulls took over overall on the day today. If you want to look at the longer time frame, we're still trading below that 200-day SMA. I use this as far as it goes the long time frame on the daily chart. The 200 will definitely tell you what direction is. It's a great indicator for the overall direction of the stock. And what you'll see is we are in consolidation mode across the board when it comes to the SPY, the Dow, and the NASDAQ. All of them have been consolidating, staying in this nice little channel here, having some minor breakouts, but ultimately popping back above it. And I like the way it is respecting this little channel I've got drawn up. And again, like I said, through all of them, really doing that very well. I could take this line right here, I could draw it straight out. There you go. It's still staying within that channel right here. Do the same one here. Now, ultimately, what we'd like to see happen is all of the indices, but especially the NASDAQ, because the NASDAQ is the one that we're really most concerned with ultimately, and is the better gauge for all of the markets and what the vast majority of the small cap stocks are traded inside of. And what you'll notice is lately we've been seeing a small cap rally. If you go through the all of these stocks, really, there's BBIG had a good one today. Ride was good today. Arrival was good today. Here, zoom it out. See there, Ride, Arrival. BBIG was pretty good today. There you go. So honestly, you go through all of these small cap stocks, you're going to notice that they all had a pretty good rally, and they have been kind of over the last couple of days, with the exception of some. Now, what caused this major market move today? So yesterday, Biden bans oil imports from Russia, calling it a blow to Putin's war machine. Basically saying, we're not going to trade with you anymore. We're not going to allow your oil and your gas to come into our country. And of course, this is amidst the other people inside NATO and whatnot saying, hey, you need to sanction the oil now. This is where we're at. He's not backing down. Sanction oil. See what happens. So Kremlin then comes out and says, United States wait for response to economic war, basically threatening that this could create something bigger than what it needed to be. And then all of a sudden this morning, you've got world shares rise, oil falls 13% on diplomacy, OPEC nations pledge. So if you read into that a little bit, global stock market rallied on Wednesday and oil prices fell by more than 12% as Ukraine and Russia look to resume diplomatic talks. And the United Arab Emirates said it supports hiking oil output to ease mayhem in energy markets. So right there was enough of a bullish signal given from the big oil giants saying, hey, we're going to increase production. We're going to make this ease up a little bit. Now, have we seen a little bit of easing in the pumps yet? No. We're still going to see some high gas prices for a little while yet, I would assume. Number one, you still see gas and oil trading above $100 per barrel, and that is absolutely insane. We want to start seeing this stuff come down dramatically. Also, we'd really like to see federal lands and federal waters to be able to start pumping again. We really need to open up the onshore and offshore drilling capabilities of our country. We used to be a leader in oil and gas, and now we're a follower, and that's straightforward. The God's honest truth right there. And I think that needs to happen in order for us to become a dominant factor in this play at the present moment in time. Russia was a big controlling factor, and they control not only some of our oil and gas, but the vast majority of the European oil and gas. And we could definitely curve that. I do believe. And of course, that's all my opinion. Now, with that being said, we're going to go ahead and take a look at this map really quick. Add to remove, silly thing. So on the map here, it shows everything was green today. I mean, everything was green, with the exception of oil and gas, utilities, and precious metals. Gold right there. Basically, everything else was just beautifully green today. Great. Awesome. We need to see a little bit of this green volatility coming back into the markets overall. And then also, take a look at what Biden said today as well. Cryptocurrencies. He put out an executive order. They want to start looking into the benefits and the repercussions of cryptocurrencies overall. And with that, you will also notice that if you take a look at Bitcoin, I'm just going to use that as the gauge. Let's see here if I can even get to it. There it is. All right, so using Bitcoin as the gauge, because it's basically the biggest cryptocurrency that you have, it absolutely skyrocketed today. And just so that we can see in a better terms here, here's Ethereum. Where's that at? Ethereum, right there. Ethereum, again, boom, skyrocket. Another one, Doge, D-O-G-E, Doge, skyrocket. And again, these aren't like gigantic, monstrous gains, but it is a great thing to see when cryptocurrencies have been taking an overall beating over the course of the last several days as well, with the whole Russia tensions. All right, so let's go ahead and move on into metamaterials. Yeah, but before I forget, let's go ahead and talk about CPI data. So CPI data does come out tomorrow morning at 8:30 a.m. This is for February. So the one thing you want to keep in mind is February was really not that great of a month as far as it goes. There was increasing
That's all, folks.
Volatility, increasing issues going on through the month of February. In all honesty, March isn't looking much better. So this could be one of those factors that help lead Jerome Powell towards pushing that inflation, the interest rate up that 0.5% compared to 0.25%, especially in the next interest rate hike coming in April. So I don't know what's going to happen, of course, next week during the FOMC meeting. He led towards telling us that it was going to be a 0.25% increase. However, like I said, it could still be 0.5%. You never really know. And again, CPI data is going to kind of help lead into that. So pushing past that, let's get into metamaterials. First thing I want to talk about is over the course of the last few days, we have seen great increased buying pressure overall. And some of this is in account of some insider movement. Now, the one thing you want to understand is that, and we'll get to this in a little bit, is the insider movement we've been seeing isn't necessarily buying from the free float. It is actually warrants, and we're going to talk about that here in just a little bit. But before we do, let's talk about the charts. So as you can see here, right now we're on the 30-minute chart, and this is showing from basically earnings right here. Earnings was on this day, and notice that it did tank all the way down. But the one thing that a lot of people didn't realize what was going on, because you never put the lines up that I tell you to put up, there they are, Fibonacci retracement lines, is it came down to that fib retracement level. Now, on Monday, I did point out that we were touching a triple bottom. A triple bottom is a very bullish indicator, kind of indicating that we may be seeing a reversal pattern. This is when the bulls have been fighting with the bears basically over a period of time. Let's zoom out enough. Let's just go to a different time frame. Zoom out enough to be able to see this. There we go. And you can see that over the course of the last couple of weeks, we have tapped it once, twice, 3 times a lady, and there she goes. Okay, so this has been basically a struggle back and forth with the bulls and the bears, jockeying over position, however you want to put it. And again, we thought we had a great runner going on. This was that 4th test of the $2 mark, pushing it up towards $2.20, but unfortunately, negative catalyst does fight back. But again, like I did just say, this is a great sign. This tap and run off of this level. Now, with that being said, we are looking to see it keep respecting this level and then move eventually up above sorry, wasn't prepared for that part right here. You see this right here? This is the last good level of consolidation we had, over the course of about a day and a half. We want to see it get back above that $1.75 mark so we can continue that bull run back up towards $2.20. 216, 215 is basically our level of resistance we want to look to get through. But before that, we always have that very psychological level of resistance of $2. Every single time you get to a dollar mark or a 50-cent mark, it is going to be very strong. And you want to straddle those lines very well. You want to set up a base level at those and the quarter marks as well. Hence the 175. All right, moving on out past that. Let's see here, 4-hour chart. Actually, that gives you probably a better representation of the triple bottom. You can see again, 1, 2, and 3 taps. Now, they don't have to touch the exact line. They need to get within a small percentage of that line. As long as they can get within a few cents of it, you can consider that a test of the area for a triple bottom. It does not have to be perfect. As a matter of fact, you could draw a trend line across these and utilize that if you wanted to. All right, moving on to the 1-day chart. And again, just confirming everything I've said. Now, the one thing we do want to always point out when you go to these longer time frames is you want to look at your MACD and your RSI. RSI has been hooking up as of that tap of $1.40 right here. RSI has been moving in the upward direction. Also, you'll notice that the MACD line and the signal line have been hugging each other. They have basically been just grabbing a hold of each other. They're testing time, basically. Once the bulls fully take into effect, once all of the buying pressure starts loading in, once the volume really starts picking up, you're going to see that MACD line mount the signal line and start coming back up towards the histogram line and crossing back over it eventually. That's ultimately what we're looking for that to happen. Once it crosses back over the histogram line, the bulls have fully taken into effect, and you're going to start seeing much better price action as we have in the past when that happened. And that, of course, hasn't happened in quite some time. All the way back here, you can see every time we get above that histogram line, the chart reflects big price action. And that's what you want to see. You want to see us get back above that histogram line, and we're close. We're getting there. We've been moving steadily towards it over the last several weeks. All right, so moving on to the important information. So I did just put a tweet out just a little bit ago. Once I was home from work and I was in front of my computer after dinner and whatnot. And what we've got here on Ortex is some amazing information. So let's just start at the top. As we know, all of this information across the top, with the exception of these two little dots right here, are T2. This is 2 days delayed, but that doesn't really matter too much because this information that we really look at has stayed the same. Utilization's at 100%. Cost to borrow has gone up quite a bit to 2.75%. The days to cover is at 7.65 days, and that is to cover all of the shares that are on loan, which is 50.9 million shares, almost 51 million shares, guys, which is 20.42% of the free float. Ortex is currently showing that the NASDAQ has reported, as of just yesterday, 42.9 million shares are short into the market. That is 16.26% of the free float. Now, take those percentages with a grain of salt, guys. Take these numbers with a grain of salt. As we know, Ortex is absolutely just a gauge. It only takes about 85% of the overall brokerages of basically the info. There's not all the information is in Ortex, okay? So you can only utilize this for a gauge. Again, we also utilize Fintel, and we're going to get to that here shortly. So before we do, we want to take a look at this right over here. Cost to borrow maxed at any point, any given point in time, when they were returning shares, they were paying 259.51% of the underlying stock. So they were paying right around $35 per share to return it back. So every time the cost to borrow, every time that you borrow a share, when you return it back, that is when you pay that borrow fee, not immediately. So when they were borrowing it at, cost to borrow of only 2% or 1.5%, if they return those shares today, it costs them quite a bit of money. And I would expect to start seeing this number reflect into the average number, which would then reflect into the overall cost to borrow. Again, this is the more definite number. The T2 delayed number is more of the on-point number through Ortex. Again, this is through the NASDAQ. So again, this is at any point, given point during the day. This is super bullish for us, guys. I don't care what anybody says. These are the numbers that we have been looking for. This proves my theory of a short squeeze. We do not need MMTLP to be the catalyst. It is going to be a catalyst one day, but we don't need it to be the catalyst now. All we need to do is keep buying and holding. That is all you need to do in a short squeeze, in a technical short squeeze, is buy and hold. Again, not financial advice, not a financial advisor. Everybody has their own agenda. Everybody has their own problems in life that they may need to exit at any given time, and that's fine. I'll never hold that against you. But in order for a short squeeze to happen, that is one of the very main key factors. And the other main key factor is going to be the options chain, which we'll get to here in just a minute. We're getting there. Anyway. So, average number of days on loan has come back up again. Now, like I said, this is one of the key things that we're going to be looking for, but you can't take it immediate. If you start thinking that this thing is over because it dropped over a couple of days, then you're in bad shape, because that's just a scare tactic. So, as you can see, over the course of a few days, this thing went from being at 52 days all the way down to, 47 days. But it has jumped back up since then. Over the course of the last 2 days, we're back at 50.25 days on loan. And also that security lending volume, that is pretty amazing. Yesterday there was 3.04 million in security lending. The volume yesterday, what was that? Let's see here. We are on the 1 day chart. We've got to zoom out, go back in quite a bit. Yesterday's volume right there is 10 million. 10 million. So there was 3 million in just lent volume alone out of that 10 million in volume. Today's volume was only 6 million. So we were just over half the volume yesterday. I can't wait to see what the security lending volume is for that. Now let's go ahead and move back on over to the internet. There we are. And continue what we were talking about. I think we took care of this page here and move on. Fintel. So Fintel, 88.56 out of 100. That is 132 out of the 5,500 stocks on this list. Also, if you take a look up here, their short interest ratio would be 4.75 days. That's how long it would take for them to cover all of the shorts according to the FINRA. This is the dark pools. So we've got two different things we use here for gauges now. I'm getting thirsty. The reason why I use so many things for gauges and I pay for these subscriptions is because I want the most accurate data and information I can have. It makes me a better trader, and I love being able to share this information with all of you guys. So, again, we're going to keep on moving down. 63.87 on the Gamma Squeeze score, guys. So this is something new to Fintel. This is fantastic. I'm so glad that they included this. This shows that we have moved up on the Gamma Squeeze. The Gamma Squeeze has to do with the options chain. So since we're at that point, let's go to that. We'll come back to Fintel here in a moment. So looking at the options chain for MMAT, what you want to pay attention to is your open interest and then your volume. That is probably the two most important things that you want to see on these charts as of right now. So if you look here, you've got 9,000 in open interest at the $2 strike. And this is for March 18th. This is just for, a few days away. 9,000 in open interest there, 6,000 in open interest just below that, 2,500 below that, and 4,500 below that. That's pretty impressive. But if you look into the very next expiration, the April 14th expiration, take a look at that options chain. Much more impressive. 2 and 3, you've already got everything that's in this upcoming options expiration. Just in 2 of your strikes. So the $2 and $3 strike is showing 8,500 between one and 8,500 in the other. So you're at 17,000 just right there. And then just keep looking. 8,500 below that, 6,656 below that, 5,000 below that, all the way down to the $10 strike, which is sitting at 9,000 in open interest. And the other, like I said, thing you want to be looking at is the volume, which I swear I just had that up here. Apparently not. Let's add it in. Ah, there it is. Volume done. Okay, so today's volume was 1,827 at the $2 strike. That means 1,827 call options for the $2 strike were exchanged today. We don't know if that's buys or sells, but we do know that that is the volume just for that strike alone. Now, you don't see the same exact volume in the next month's options expiry, and that's because there's still some time to go. This right here is going to be a lot of the volatility that's been picked up off the last couple of days. You're going to see a lot of of movement in the options chain over the course of the next several days. And I'm telling you now, it looks to me from the numbers that we're seeing that we have got a lot of potential in our very, very near future. And I'm definitely keeping my eyes on this information. Back over to Fintel. I'm going to be going through this information. Like I said, I just got home. I noticed this was up there. First thing this morning, I did put it in my tweet, and I haven't dug into this yet, but this is amazing. The gamma squeeze score is the result of a multi-factor quantitative model that identifies companies that have the highest risk of experiencing gamma squeeze. The number ranges from 0 to 100, with the higher number indicating a higher risk of a short squeeze relative to its peers, and 50 being the average. We are well above 50, so we're well above average, which means a gamma squeeze is in the very near future, as well as a short squeeze right up here as well being in the very near future. A gamma squeeze will bring a short squeeze every single time, and a short squeeze can absolutely bring in gamma squeezes. You can actually have them reoccur over themselves many times over. Now, with that being said, let's take a look at the short shares availability. So, as you know, on Ortex, it showed 100% shares available, or 100% shares utilized, none available. Again, we utilize that as a gauge. That is across the NASDAQ. That is not everybody. Here it's showing 400,000 shares are available according to a leading prime brokerage. And that's going to be one of the big ones, one of the ones that play in the dark pool, right? So, as of 11 hours ago, first thing this morning, there was no shares available, okay? That right there is telling you that that cost to borrow number that shot up way high, that's probably pretty real, guys. This has been going on for quite some time now. The share availability blipping on and off, up and down. According to Ortex, as you had seen, 400,000 shares were returned today with another 1.5 million shares borrowed. According to Fintel, 400,000 shares are returned to them today. That's what they had available, all right? So, again, the availability of the shares, very limited. It's getting even less limited with the exchange of MMAX shares. Now, that's not what we have had today or the other day. And we're getting that. We're almost there. According to the short borrow fee rate on Fintel, it's at 4.26%. The short borrow fee rate is, of course, how much they would pay to borrow the stock. Anyhow, moving on. The dark pool showing overall volume, total volume is 3.562%. More than half of the volume today came through the dark pools. That is not uncommon. We see that all the time. We're kind of getting used to it. 48% of that, almost 48.5% of that was short volume, guys, showing the manipulation never stops. They're going to continue to try and bring this stock down any way they can. They don't want to see it get above $2 when it's going to start getting a little bit more expensive for some of these short-term short positions to hold the stock. Long-term short positions, this thing can go a long time. We've got quite a ways for this to go in order for shorts to start covering and closing their positions that have been holding onto this stock for several months, bringing it down from that 1150 point or 21, whatever you want to call it, point at the merger, bringing it all the way down to 280, bringing it back up, and then slamming it back down to $1.38. We're just waiting on all that to happen, and it's coming. It really is. Again, the best thing you can do is buy and hold the underlying security. Not financial advice. I'm not a financial advisor. All right, insider trading. So here's what we've got. The one thing you want to pay attention to is Fintel does not exactly have all of their numbers in line. These numbers are pretty good. The outstanding shares, the insider shares is not correct. We're actually closer to the 65 million in insider shares, and that is as of right now. And that is just insiders. That does not include the institutional owners, which are also insiders. There are several institutional owners that we have that are insiders, including Lambda Guard and Greg McCabe Petroleum. So you got to keep those guys in mind. Oh, and Novacor. So if you come down here, you'll see that the other day, Thomas Gordon Welsh and Anna Lambert did decide to go ahead and exercise some warrants. Now, again, we have talked about this. Exercising warrants is dilution. It is not a conversion. They are not taking these shares off the free float or the outstanding shares. They're actually introducing new shares, but not to the free float. They introduce new shares and they go into an insider holding position. That is what is held by the insiders. So you'll notice that the free float is minus the insider shares, right? Now, what you'll also notice is that there's this F, We've talked about this before. This is what should have been done back here when George did his sale. When he did the exercise and then the sell back, he should have filed an F. He did not. He filed it as sale, and it caused a little bit of controversy on Twitter and whatnot, but no big deal. He even explained it was for the tax man. But they've been doing that here. So Eric Leslie, he did some the other day at 75,000. We talked about that on Sunday. Thomas Gordon Welsh and Ann Lambert both did the same exact amount. Both exercising, both selling for taxes, and both retaining the remaining of those shares. So the shares that they sold for tax purposes, that gets introduced into the free float. That is dilution. Now, I don't want you guys to get scared of that word. It's actually a very common word, and it happens all the time. Anytime somebody exercises warrants and they sell for tax purposes or just sell out, period, that is dilution. The number that you're seeing here, 21,000 shares, that is nothing when you talk about 280 million shares, 285 million shares is what we're up to. All right. As well as right here, Maurice Gouton. I think I said that right, and I apologize if I murdered your name. Right here, they exercised warrants, 7,485 shares, and sold for taxes, F is taxes, 1,813 shares back. That will be introduced into the free float. Now, what's been great is we've been seeing this happen, and we've been gobbling it up. These last few days have been absolutely fantastic, guys. Anywhere from, 5% to 3% up. I think we were finished up, what, today? Geez, I didn't even look at that part. Come on, Smoke. We finished up 1.89% today. Wow. Great. I'm great, aren't I? No. All right, so let's move on. Okay, so last thing we want to look at right here. This is Chart Exchange. You know how much I love Chart Exchange. They give us a really good gauge, but unfortunately, it doesn't get updated all that quick. So what we've got as of right now is not showing anything different than what we've seen. We're only at about 48.63% overall short volume right now. However, once all of this information gets plugged in there, I'd be willing to bet we're going to be closer to that 55 to 58% overall short volume. Last things we want to talk about. So Metamaterials, they did have a little bit of a conference today. They were in the Investor Summit conference. I do believe Sterling did get that recorded. So make sure you go over to his channel and watch that. I've already seen it. And it is about 30 minutes long, and it is the typical investor presentation for the most part. A slight twist. Ken kind of shook it up a little bit today. I liked it. They talked a lot about the 5G and the nano web. I love how they talked about the fact that we're already in prescription glasses. We have the ability to go right into prescription glasses. Ultimately, what I would like to see our material do is be able to alter the prescription. That's going to be awesome. Being able to have a one-time buy, you buy your glasses, and boom, it just alters with your eyes. That I think that's going to be pretty cool, and I think that is going to be on the forefront here in the very near future, in my personal opinion. So again, get over to Sterling's channel. He's got this recorded. Go ahead and watch that. Like I said, it's about 30 minutes long. And then finally, oh, well, there it is right there. Sterling. Boom. Ha! Let's get over to George's page. He had some stuff going on today. What did he put up here? Okay, so AWE Night 5G and the XR Future, March 16th at 12 p.m. Eastern Standard Time, 9 a.m. Pacific Standard Time, 5 p.m. General Mountain Time. So in other words, at noon my time, you can watch this probably on their channel, I believe. Not too sure. I'll dig into this a little bit more. Scrolling down here was the better part about the day. First thing this morning, George tossed this up there. I've said it a million times over. I love this gadget. This is going to be a game changer. The glucose wise is amazing. Once this thing hits the ground running, it's going to be phenomenal. I'm telling you. This will change the way everybody measures their glucose, and this is going to do so many more things. This technology is leading into many different forms of cancer research. So like mammograms, when they push down on the breast, when they put the breast, it's actually a similar design to this here. When it goes in, it pushes down, it's extreme pressure, and it's painful. What they're trying to do is take that pain away and make it easier on the woman. The same thing with the whole diabetes. monitoring the glucose. You've got your Dexcoms and all of those where it's actually invasive. It does have to be inserted into the skin, and that's puncturing. That makes it invasive. Metamaterials has created a non-invasive form of doing this, and I do think that is going to be ultimately what changes the entire course of this company. The low-hanging fruit's great. Being involved in AR, having a film that goes over glass to create a stronger 5G, that is phenomenal. That is a great thing that Metamaterials has been able to do. The fact they've been able to layer different layers into that, to be able to make it do other things such as being able to do projections, being able to anti-fogging and glare protection, all that other stuff, that's great too. But once you've entered into that medical sector and you've been FDA approved, sky's the limit. All right, guys, so that's what I've got for today. Remember, keep your eyes peeled for CPI data. If it comes in a little bit hot, expect for a pullback overall in the markets and, of course, in metamaterials. But then again, we can always keep trending against the market like we have over the course of the last few days. I'd be super pumped for that as well. Like, subscribe, make sure you comment for the algorithms below, and do what you got to do to make sure these videos get out to your friends and family. It's very important that everybody knows about metamaterials and the power that they have coming up here in the very near future. Peace.